Second. Okay, so once again, before everything else, just to welcome you guys and thank you very much for attending today's live Mondays webinar, and today is the 11th of July 2016. Okay, so let's just get going. Now, with regards to post-Brexit, as I've mentioned, now, just to let you guys know on the consumer confidence indicator for the UK, okay, post-Brexit has just plunged from 8 to -9. So you imagine if it's 1 to 10 and the confidence level was at 8, which was, reasonably good, and it plunged all the way 180 degrees opposite to -9. That's a very big sign of a downward momentum for the pound and downward momentum for the economy. And we are actually going through a couple of things with regards to politics. Okay, politics in the UK, of course, some possibility of a new PM. They're talking about it. Okay, she was pro Brexit as well, and it looks like market sentiments just shifted to the upside once they were positive that she might be the most probable person to be the new PM for the UK. Okay, so they like that idea of her becoming May is her name, and to become the next new PM. So that was the reason for a spike. Okay, but we're looking at the Euro USD at the moment. Now, for Euro USD, a couple of experts out there, a couple of how the things are evolving with the US as well as what's happening in post-Brexit impacting the euro. It's looking like there is a major support area at 1.0820, which is bang on the psychological level as well. I'll just put that level on for you because that is a level to watch out for, and then we'll look at whether we could spot some probable or possible pattern. Okay, so we are looking at Euro USD 1.0820. Okay, 0820 there. We'll just plot it first and then we see what's going on. That's really far down. It may not actually be right 100%, but let us what do you call that, plot the support level as we can see, and let's use the 4-hour chart. Okay, because I want to be clear that we have got a significant support area that is close to the price now, but I wouldn't actually take that level, that support here or that one there just now. What I'll do is I'll take the closest one, as we can see significantly on that one there. Okay, as you can see, you've got a bit of a support all the way through. Okay, and I'll just mark that based on that candle there, perhaps that longest one there. Okay, so we've got a bit of a zone, sort of a support zone here for the Euro USD. Okay, but 1.0820 is not the support. I'll just confirm that. That's 1.0820 is actually your probable take profit area if at all you've got a bearish momentum for the Euro USD. I do apologize for that. It's 1.0820 is a probable TP area if at all this materializes into a nice flag and pole pattern. Okay, so I'll just draw the flag part of the pattern for Euro USD. As you can see, that's the pole downwards. Okay, and then you've got the flag and upward channel. So usually what happens is, yes, you will always get that sort of correction or rebound upwards and play around that area, but it is actually playing around a significant support area. As you can see, a very nice support area here between 1.1061 to 1.1048. okay, around that, and they are all they all revolve around close to the cycle level, especially the 1047 area or 48 close to the 50 area. Okay, but here looking at prices now, it's just flirting at the 1.1061 area. I mean, to look at more potential to the upside, I would then look into prices going above 1080 or 1090 above, and then you will see a better idea on the upside. Okay, so at this moment it needs to actually break out It has broken out of that channel already, but then break out further from this zone 1.1047. So if we adjust the numbers, the site numbers to be an ideal sell level, then I'm looking at a price at 1.0440 to be an ideal selling area or sell, or an ideal selling zone. Okay, but so that actually shows that that hasn't actually happened yet, because it's got a bit of room, because this is based on the 4-hour chart, for it to come down lower. Now for conservative traders, including myself, I would prefer for prices to look at prices and let prices help me decide. Okay, so that should actually come under the 1 point, should come back down, let it do whatever it's doing just now. Okay, and then once it goes under 1.0440, then it will be an ideal sell area. But then once it does actually go lower and we're looking at more pressure to the downside, what do we then do? We would then need to understand where would it be possible for a TP area. So that was actually stated earlier on, that prices, I mean, a lot of experts out there, quite a number of them from banks and all that, they have actually hinted the 1.08 area, okay, 0820 to be specific, as an ideal area that you could take your TP. But of course we want to take it in stages. It does depend on the time frame that you're looking at as well. Okay, so here itself, if we treat that as an ABCD like pattern, then I would just drag the Fibonacci retracement from the very top to the bottom here, okay, based on that pole, the pole pattern. And if we treat that as an ABCD pattern, then we've got the A right up here, B down here, okay, then you've got a C at the 50% Fibonacci level. Okay, so if at all it is at 50%, usually what happens is you pull your B to C and to forecast an extension at the 200 level. Okay, we pull the highest price here, then you've got a 200, you'll mark the 200 as a potential. Let's look at where prices could potentially end. We are still looking at a 4-hour chart, so that does actually mean it's medium term, okay, medium to long or short to medium, but it could be just a little bit further than medium. It all depends on market conditions at the moment. So here it's marking a way downward move, or TP, at 1.0635, but I don't want you to get too excited with that price and just think about the profit area. We need to actually plot a potential risk level as well, okay, and we want to take that in stages. Okay, let us just do it one by one. Let us pull that flag area all the way down here, okay, and we pull that. Let's say we treat that as an ABCD and we take that, so that is another area potentially here. Okay, right. That is based on this flag-like pattern, potential 0.6. It's still giving us the 0.6 area. Okay, but what about the 0.820 area? Let us plot that based on what most of the market experts are talking about, 0.820 area, due to a lot of fundamental factors, okay, due to Brexit as well, due to a lot of things. It is pulling the Euro USD prices downwards, but it does not mean that the Euro GBP is doing the same. The Euro GBP, Euro versus Pound, is actually doing a total opposite of giving us a bit of a bullish momentum as opposed to a bearish momentum like what we're seeing here on the Euro USD. Okay, so 0.820, let's just do that. Okay, right, and once we plot that, so we've got 0.820 right there. Okay, that's a 0.820 area. 1.0440, definitely an area that you can ideally short your Euro USD. Okay, this is what is going on with the GBP, with the let me just see, on the Euro GBP, total opposite, with the Euro CAD as well. We'll go over with Euro GBP, Euro CAD, because both Euro GBP and Euro CAD are giving us some nice trading opportunities for the upside, not downside. Now we're looking at Euro USD, that is for the downside. Okay, so 1.0440 looks like an ideal area that we could short, but it is a matter of waiting at the moment. Okay, it is actually important for us to do so because we have got a pattern here, definitely a sort of a pole and flag pattern. We call it a bearish pole and flag pattern. Let's just go on to the highest time frame. As we can see, I just would like to look at the behavior of candles. Okay, we have got some bearishness here. We've got a play of a longish candle there, but we have not applied the moving averages as yet. So let's just give us a bit of an idea on the trends perspective. We'll start off with the 50 exponential moving average. Okay, and then we'll carry on with the rest with the 100. Secondly, so 100, make that a little blue so you can see. So we've got a second moving average right there, and then we have got the last third one, which is a 200 moving average. Okay, so oops, sorry about that, 200 moving average. All right, let's just try dark color there. Okay, there we go. So we've got three lines here. From the very long term, you could see that most prices are under the three lines. Okay, here itself, you could see all three lines. The behavior of the three lines as well is on the downside, separated, or have got gap in between the lines. They're not touching, they're not entangled, which is a good sign. Pointing downwards, it's a good sign. But on the daily chart, we have got it meeting. The three lines are actually meeting, going a bit of a sideways. So on the daily chart, there may be a bit of a uncertainty going on, despite the fact that candles are trading under these three lines. Okay, so if we go on to the 4-hour chart, we do see a very nice clear indication to the downside. It's a bit on a 4 o'clock type angle for the three lines to go downwards. Okay, if I minimize that a little bit, now we have got that angle itself. The angle of current moves here, like a step down, it is heading towards a 5 o'clock type angle, which is giving us some momentum to the upside. Okay, we do need to understand that prices now, as you can see, the last candle itself, based on the 4-hour, look at how candles are having this long wick at the very top. You know, as it moves, if it creates longer wick up at the top, then it does actually show a little bit of weakening of the body. Okay, weakening of price action, weakening of bullish momentum as well. So the longer the wick to the upside, see, like this one here, it tried to pierce through, and it did pierce through a little bit, the 50 moving average here, but then the whole body or the interest in buying just subsided. Okay, so that gives you a bearish momentum. Okay, so let's go on to the 5-minute chart. Now, as you can see, 5-minute chart showing us a lot of bearishness. Okay, bearish momentum, probability of prices coming downwards. But we have marked the area here. Okay, it's 1.1061. So 1.1061 needs to come under that line and go through the 1050 area, and once it does go through the 50, go lower than 50 by 10 pips, about 1040, that would mark your ideal entry area. Okay, so we go on to the 30 minutes chart, let's say, and there you go. You can see that really clear bearish-like pattern showing you a lot of potential to the downside, but we have got that barrier here for prices to first come through and come under and meet us at 1.0440, and then that could then mark a potential or an ideal entry for a sell. Okay, so you can take it in stages, 50 to 100 pips per time. Once it crosses again under the next site number, then you can actually re-enter again. Okay, so that would be 340, 100 pips downwards, if you may. Okay, and this is basically how you can actually aim that in stages. Okay, because 0. Let's say 0.820, it's not really right actually, that Euro USD on the downside shouldn't be that. It is actually looking at the major, it's talking about major support at the 0.820 area. So no, this is giving you, you could still take that 100 over pips or so to the downside, but you can literally take profit once it comes under 1.0440 area. Okay, to look look to your left and look at significant support area. Okay, so here, for example, just very simply, if we look to the left, let me just do that itself. Once it goes under that red line, we do have some areas to look at, possible buying area, but you would need to look at how significant that move was. Okay, so here, for example, was it made out of really powerful bullish type candle right here? It risen up really sharp to the upside on a 12 o'clock angle. Okay, we've got more here. So yes, we do have some areas down here that poses some buying area as well, but at this moment of time you would need to really look into that area once it goes under that for a buy type entry. Okay, we've got some questions here. Why did the pair react as expected to the NFP? Teboho, that was a very good question. That is a very good question. To the NFP, I mean, the thing is that there has been a lot of news about market manipulation as well at the moment. There are ways that currently what's going on with the states is that they have got to give a positive outlook. If you remember, as of last week or even 2 weeks ago when we did the Monday webinar, I've mentioned to you that it has to be positive before election. Okay, it's really difficult for them to make that negativity all the way through and don't actually get positiveness from the people and from investors before election, because it's going to be a greater collapse if that actually happened. Okay, so they have got to somehow find the numbers from somewhere to make it positive. So, but in my personal opinion, I'm not sure, or I'm not really convinced that the numbers are really the numbers that are showing what exactly is going on with employment in the States. Okay, because I've shared this with the team here as well as some investors, where in the US, it's a lot of fun and games going on behind the curtains, because there seem to be a competition between investors of gold and also the Federal Reserve or central bank. Okay, they have hence the reason they would prefer to really make the interest rate lower actually. Okay, there's good and bad. I mean, if it's lower and it's actually going into the negative territory, it's actually very good for investors of gold. Okay, because gold is known to have zero yield. Okay, zero yield. It's got no yield. It's called zero yield. So if the interest rate is under zero, like negative, then zero will still be bigger number than the negative number. So that does actually show in a negative world, we call it a negative interest rate world, or NIRP, NIRP, it is benefiting the government much more than it benefits the people, because banks, central banks and all that, what money is actually gold. Gold is real money. There are differences between currencies and money. Okay, currencies, the paper money that we have nowadays, has lost a lot of its value. The one that are real money are actually precious metal, especially gold and silver. These are real money. Okay, so central banks out there are trying and have been doing so, especially in China, in the States as well. They have already been really going into the buying spree of gold and silver for a long time. They need to secure themselves, so they are competing with the actual investors, outside people who are investing in gold. Okay, so this is the economy at the moment. When they are actually doing that, there's a lot of inside information from banks and all that, where we could see that the silver reserve has actually gone up for the States, and the gold reserve has actually gone up, and a lot of things. When you see that they are doing these kind of activities of hoarding or buying gold, something is not right with the economy, and there's actually a very big signal of a downward economy of the country, hence the reason. Okay, so it is quite impossible that they are really doing very well and the employment figures are really what they say that it's happening. Okay, so yes, it did not react as it is, but this is what the media is saying. But they create the whole thing. Okay, they can actually create anything. The Federal Reserve could actually print out money if they want. They can control. All they want to do at this stage is not to go through deflation. They don't mind inflation. They'll control the level of inflation, but they don't want the country to go into deflation, which is negative inflation. Okay, that's all. There's a control. So they have a lot of control to do that. So in answering your question, um, a lot of things would come out as expected and planned by the people behind the curtains already. Okay, it may be a shock to us, but it shouldn't be a surprise that they will do all they can just to benefit the central banks, the governments, and everything else. Okay, because this is what's going on. All right. So, okay. So that is basically it, because we also have got a bit of an impact to the dollar based on oil inventories that have actually dropped by 22 million barrels per day. Okay. So the oil inventory has dropped. Last week itself, oil has dropped by about close to 7%. So here, with what's going on with oil as well, I mean, it's also quite geopolitical, okay, because there's a lot of things going on in Syria, a lot of things are going on everywhere that the state is trying to sort of help, okay, them in the Middle Eastern countries are usually countries that the US would benefit from oil pipelines as well. Okay, so you got Syria underground, you got huge pipelines going to Turkey and all these kind of stuff. So with that, we don't know to the extent of how true all these geopolitical things are, or propaganda or anything else, but they seem to have, with oil's prices going downwards, with what's going on in Canada as well. There's a lot of things going on in Canada that is sort of impacting the price of oil. We are looking at the USD/CAD to have some upward pressure and also some opportunities for you to buy. And they do actually, I mean, quite a number of experts are talking about a possibility of prices for USD CAD to go up to the 1.3313 area. Okay, so this is also because CAD, or in Canada, it's quite dovish at the moment. It is on the downward trend in terms of economy, political, as well as the oil barrels positions and everything else. Okay, one of the largest reserves as well. I mean, Canada has got quite a number of oil reserves. Okay, so that's Canada. We'll go and visit that onto the chart. Okay, Teboho is also asking about Russia, which he has heard has oversupply of oil, possibly, yes, and bad news for Canada. Yes, possibly. I mean, oversupply of oil will then make oil cheaper again. Okay, so because it's a glut, oil glut again, and what's happening in Canada may be separate, but it is actually being impacting the oil prices as well. Okay, so yes, we do have that going on at the moment with Canada, but we'll take a look at what's going on with prices at the moment as well. Okay, so we'll just leave Euro USD and we'll go on to a different pair, because now, as I've mentioned earlier on, you've got challenges here too. Yeah, you've got a 200 moving average, as you can see, for the Euro USD. So if prices at all needs to go up, it needs to go pierce through that area there, some major resistance area and go pierce through the 200 moving average. Okay, but now it's looking like the biasness for the Euro USD onto the downside. But like I've mentioned, it needs to pierce through, which is happening a little bit now, coming through that 1.1061, and then pierce through further, and then go through the 1.0440 area, 1.1040 area. Okay, once it goes under that, then you've got better selling pressure for the euro versus the dollar. Okay. Oil chart weekly says Teboho, if that forms a yes, we can actually take a look at that. I don't really trade chart patterns. I trade more a harmonic style pattern that I convert to the geometric pattern, but we can always use that as a confirmation onto the HNS head and shoulders pattern as well. Okay, let's we'll go through that, no problem, on the oil as well. All right, that's your Euro USD on the 30 minutes chart. So we go on to the 1 hour. So as mentioned, your selling opportunity ideally could be under the 1.1040 area. Okay, but if you want to know where exactly you can take profit, all you need to do is you treat that as an ABCD pattern. So you take that at the very top, then you've got that there, and then you've got that at the 50 area. You take the AB equals CD, so you've got some room here to go down to this area here, which is quite a nice area to look at. Why? Because if you look left, that's where the support started. So try not to be too greedy. Okay, so you want to look at something here, let's say. All right, or earlier, because we've got a bit of a room, 10991, 1047. Okay, try to play around that area, but not too close to the 1097. Probably, yeah, you would need to look into that, adjust that to the psych number, and take that downwards. Okay, but I'll update you more on what the banks are playing in terms of numbers, prices that they are looking at, because it does actually revolve around after the US Open. They'll come up with more numbers, and they would like, see, the big boys at this moment of time, they would like to play in stages as well and look at what the US Open brings, what the London Open brings. So now, after the US Open, probably a little bit more later on, they'll see how the market settles to what have happened today as a Monday, and then you will see that they come up with perhaps even better take profit area, and once they got a better idea, they will then post it to their money management departments, and then I'll be able to take a look at that and combine that with a chart, and then we can trade that. Okay, so let's take a look at what's going on here. Let's just a little bit on that. Okay, they're still playing around there. As you can see, lots of challenges on the 50 and the 100 here, and the 200 moving average on the upside. So we'll wait and see what happens there. Okay, 1040 is the ideal selling area for the Euro USD and the USD JPY. Now the USD JPY, it's looking like they have hinted the USD JPY to be on the upside to the 10260 area, but here I've marked the support resistance, or more like the support, significant support area here, but it then found resistance there. Okay, so here we would need to first monitor and look at whether or not prices would come under all this powerful support area, and potentially at this under the 102.42, which we can then adjust it based on psych number at 102.40. So under the 40, again it's under the 40.40, and then we can see more whether or not they're more bearish like momentum. Okay, so we need to look at that, wait a little bit on the USD JPY. Okay, but here they're hinting, markets are hinting on possibilities to the upside. Okay, and here we can see that 4 hour is hinting on the downside. It's actually may actually resist very close to the 100 as well. It still is resisting there, and then it found resistance at the support area as well. So here it's still, for me, USD JPY at this moment of time, not sure why, it is giving us some bearish sort of momentum based on technicalities at the moment. It is even on the daily chart having a a bullish type candle, and it's resisting at a 102.64 area. Okay, so that's for USD JPY. Yes, Veronica, we're looking at USD JPY at the moment. On the numbers, which numbers you've mentioned about, Veronica? Numbers on, is it the USD CAD? Was it the USD CAD that we've mentioned? USD JPY, you mean? USD JPY on the upside 102.60. Okay, 102. Okay, now this for USD JPY, the 102.60 is your potential. Let me just tell you, 102.60 on the upside. There are more upside once it crosses 102.60 and above and above. Okay, the reason is at 102.51 is actually your 52-week high. Okay, it's a very important indicator for me as well. I like to look at the 52-week high or the 52-week low for the USD JPY. The 52-week high was at 102.51. So once prices have actually gone beyond 102.51, 102.60 and above, that gives us hints to the upside. Okay, to the upside much more, because it's used that high to actually go higher. Then that means there's enough momentum from the other end of the transaction to actually go longer, to go long. Okay, so it's a good indication, but if you can wait a little bit more, you know, once it reaches 80 and above, then it gives you even more potential to the upside. But USD JPY, just looking at the USD JPY chart on the daily chart, you could see that you've got a longish candle, a lot of momentum, a lot of movement to the upside just from this single candle itself. Now, if you go onto the daily chart or the weekly chart, let's say, and the monthly chart as well, let's say you could spot momentum picking up. That means that the candle is getting longer on the bullish side, and then you go to the daily and that happens as well. Now, these are long-term time frame, and if the longer term time frames are signaling longish powerful candles to the upside, then it's a good sign. It's giving you a lot of momentum. You might not find that on the shorter term. On the shorter term time frame, you could see some bullishness picking up, but you don't have that longish sort of candle or momentum as yet. And the same goes here, 30 minutes chart, you don't see any longish candle and all that, but when you go onto the daily, you see that longish candle. So that actually gives us a bit of an indication that the bulls might just want to come back into the picture yet, but has not done that yet. Okay, on the shorter time frame, but this is an indication based on longer time frame of what the market may be doing. So yes, there's some bullish sort of momentum here on the daily chart. If I go on to the daily chart, and by zooming out, you could see that very simply. You could see how there is a curve like an upside down cup coming downwards here, correct? But then if you look left, where was the point that prices have actually shot up? And that is definitely a significant rise up. Okay, and how long how long has it risen up to? By, let's say, that one there, say August 2014, yeah, then right to the highest point there, it's 2015 in June. Okay, almost a year. So it took it almost a year to go really high, and it actually sustained that move to the upside up to that level, and then it came down. So it's important for us to look at the support area. that support area at the time. At the time, the support area here where prices have actually just shot upwards, it's really, really important. But the best is to take it above that resistant area there as well. Okay, so 103 and above, of course, 103.10, it's a more comfortable area for us to see more upward move, okay, to the upside. But it could literally start just now on market going upwards, because here on the daily chart we're looking at some very bullish momentum trying to pierce through. Once it pierces through that zone that I've marked it by the horizontal red lines, then it shows that it has more probability, or higher the probability for it to rise up beyond this level at 10310 or 103.11 area, because this was the area of huge momentum to the upside. Okay, so that is basically what's going on with the USD JPY. All right, now let's look at GBP. What's going on with the pound? Now the GBP US dollar is expected to have a potential TP area at 1.2700 area, okay, 1.2700 area. 1.2700 area is a probable take profit area if at all the GBP, or the pound versus dollar, continues to build momentum to the downside. That means more bears are ruling the whole drama of the GBP USD. Okay, now here of course you would need prices definitely to go under the 50 area. Now it's at 1.2965, so 65 and 55 has got 10 pips, 15 pips or so to the 50 area. So 1.2950 is your side number. Okay, so it needs to go under the 50, like 1.2940. Again, it's at 1.2940. So you could see that there's a lot of coincidences of majority of pair we are waiting to short it, and it goes under the 50 or at the 40 area. So this is a game plan as well. It may be a possibility of a coincidence, or a possibility of a game plan by the bigger boys of selling, or looking at prices to reach at that 40 area under the 50. So here for the for the GBP USD, we are looking at potential to the downside. Let's say you want to actually start selling, make sure you are selling under that 50 area as well. Okay, 2952, as you can see right on the dot of that 50 moving average, it's marking the price at 2950. Okay, you could see that 1.2950, 52 also. So that is actually a good sign. So under that, it will be great for us to consider a sell opportunity. Okay, again, you can take it in stages, but 2700 is an ideal area for taking your profit for the GBP USD, as indicated by majority of the major banks as well. Okay, so let's look at what's going on the 4-hour chart. On the 4-hour chart, a very nice, clean, steady movement by the 3 moving averages all the way downwards. As you can see, they're separated by each other, but most importantly, they've got a very nice angle, a nice falling angle to about 5 o'clock, 5 o'clock towards 6 o'clock angle. That's a good sign. Okay, and here if we zoom in a little bit, you could see that they're all under the candle. So 4-hour chart gives us a good clear downward signal. The same goes for the daily chart, and then when we go on to the weekly chart, it is the same. We've got candles, as you can see, dominated. Majority of the candles here, which are under the 3 moving averages, are predominantly dominated by the bearish type candle. Okay, so now we are looking to the right, and we're waiting for the right price to look into more downside pressure for the GBP USD. So again, 2700 is a possible take profit area by the end of the week actually, and this is what has been expected by majority of the banks. Okay, so let's look at what else have we got here. Let's look into oil, as some of you are quite interested in looking at oil prices. This has been a pattern, a W-like pattern that I have drawn and spotted some time ago, and it's just playing about a very nice, how you call that, reversal at the 5147 area. Okay, very nice, and he has actually done a very nice reversal. I mean, oil has been for the past 2 weeks very nicely traded instrument based on the pattern. Has gone on very well. So here itself you've got a W-like pattern, and that W-like pattern has reversed in this zone between 47.80 and 51.47. It started to reverse, so we're expecting a bit more fall. If it's based on this W-like pattern, we're no longer trading the A, B, C, D, the C to D. We are now trading the D to E on the downside, because if you guys are asking where exactly would the TP roughly be, it could potentially be at 50% retracement of the C to D. So all you need to do is pull your Fibonacci retracement from C to D and look at that 50% as your minimum area that price could potentially go down to here. Okay, so I'll take that and delete that and remove that, and there you go. You've got the 43.50 area as a potential, okay, for a take profit on the sell side. All right, so that's basically an area that it might just try to first pierce through the 50, the 100 and the 200 moving average first. Now when you look left, you've got a lot of buying zone here. Okay, you've got major buying zone here and here as well. So this does actually give us a bit of a hint that it would be best, if at all you're selling, to actually exit just before coming downwards to the 43.50. So 43.60, which is $10 above that 0.60, 10 points or so, you can call it that. It's actually in dollars. Then you've got 43.60 as your ideal exit level or area. Okay, if you want to take that earlier, you mark it here. Let's say that's 43.13, 44.13, let's say. Okay, not as much as earlier on, but if you want to look to the left and look at price concentration, and you could see that that's one area, 44.03, as well as an area to actually before it touches that area to exit. Okay, so that's basically it. It's still got some significant movement there, which is quite good, but this is how the pattern looks like for the oil, and that's a W-like pattern, and we call it a bearish W-like pattern, where we have traded, some of the investors or traders have actually traded from C to D, but we didn't actually really trade at this point of C. We convert that A, B, C, D initially into a geometric type pattern, so we find the cross, and that cross lies here at approximately 38.97. Okay, so if at all you would like to just take that price and enter, you could see that on the dot of that price we've got very significant buy zone, again buy zone. So me personally, I would adjust that to 39.10 to be my ideal buying entry, and then take the profit before 47.80, which is 47.70. So I have benefited with my oil trade from 39.10 right up to 47.70. That was a very good trade. That was really a good one to look at how it followed through the pattern quite well. Okay, so that's for oil, guys. Okay, so we're looking at a downward at the moment, move to the downside. All right, now if I take that upwards all the way up there, as you can see, you can always aim that 50 area, but you would need to adjust that a little bit, even at 44.10, let's say, as a potential area for a take profit, okay, for oil. All right, that is for oil. Now, what about the Euro GBP? Now, Euro GBP, which I've mentioned earlier on, opposite the direction of Euro USD. There's a lot of upward move momentum expected for Euro GBP. Quite a number of traders have literally signaled the Euro GBP potential to reach the 0. Now it's at 85, even as high as 9,000 area, or even 9,400. It's just giving more and more room to the upside. As I've marked here, close to all this major resistant area, we're looking at 8,700 area as well. Okay, 8,600 area, 8,670 area. Okay, as well as higher than that by 100 pips also for the Euro GBP. Okay, so it is definitely giving more room to the upside. It's looking as like that due to the angle that it is trading as well. Okay, I think I've got some question there. Teboho, how can the M pattern form on that movement? M pattern form on which movement? This is actually a W pattern here. It's not really an M if it is Euro GBP. The Euro GBP, even though it is a W, what we are doing is we're trading the C to D, but it is showing us that there are more room to the upside, but not on a bullish pattern. The pattern itself is a bearish pattern, which is a sort of W-like pattern, but just because of the personality of how how do you call that? It works with the Euro GBP. It is showing an upward move from C. That's your C to the D. But once it comes to an area that we call it a potential reversal zone, very likely it'll have that turnaround downwards. Okay. If I pull that very big move down here, all the way from the top to the bottom, okay, that gives me an idea that prices at the moment here, the next level up is your 88.6 area, and literally that could be an area where reversal could happen. Okay, at that area there, and then the price there at that 88.6 is at 861. Okay, 3. So yes, you've got that almost 100 pips move on the upside. Now it did actually touch, that's the thing, it actually touched already that area there, right? And it's on the way down. So this is the part that it may be a bit challenging to know whether or not that is where it would just come downwards. So here, what we can then do is to give it a bit of an idea based on the wave pattern. So if I've got my 1 here, my 2 down here, that could be my 3. Okay, what it means is that my 3 would come down to 4 somewhere. Okay, and then there will be another leg upwards to 5. Okay, so once it reaches the 5, only then it would make an ABCD type pattern to the downside, most probably. All right, so this move here is based on the 5-wave pattern theory itself. This could be 1 up here, 2. This long move upwards is a 3. So yes, it's about to come down anyway. All right, and then there should be another leg upwards. Okay, that is for the Euro GBP daily. Okay, so that's basically it. Oil, what do you mean, Teboho? You are wanting to go back to oil again? Yeah. So oil, this is what I've shown you. You've got a reversal zone between 47.80 to 51.47. Okay, it's on its way down. There is some room to take profit for your sell at the 44.10 area. Okay, right. So that's basically it. Okay. Okay. Teboho is asking how can the M pattern be formed with oil? What you would need to do is to first understand that the M pattern is made out of a first you need to look at a bearish ABCD pattern. Okay, then on the left, the biggest move, you attach it, and then it becomes an M-like pattern. So, okay, to demonstrate, I'm not sure why you're saying there's an M pattern. There's a big W-like pattern here. Okay, so this is your W-like pattern, which has finished at the D point. Now it's on the way down. You're trading from D to E now. Okay, but unless you are talking about this area here, that could be a potential M pattern. Is that what you're talking about? You're talking about an area here that could be an M-like pattern. So you're expecting that to go on the upside. Is that correct? Is that what you're talking about there, Teboho? Ah, I see an M. Okay, yes, it does make a lot of sense. So yes, you've got a potential here, M, and then you've got a turnaround in price to go up a little bit. But that upward move could potentially be only about 50% of that C to D move, if the C to D of the M pattern. So I'm talking about C here, okay, potential D here, right? So your D could literally be there. So what you would need to do is first to treat it like a ABCD pattern first. Okay, so I will go here, I'll erase all drawings, and I'll look into, let's say I'm taking it from here, and I'll pull it all the way up there, and I've got that at 61.8. Wait, I'll take that first, right? Down, oh, it's the wrong one. Let's take the Fibonacci all the way from there, all the way down. Let's look at where C potentially landed 78.6, correct? So I'll take that as AB equals CD first. So yes, it's literally on the dot of where price is now, okay? So it's signaling an area where price could potentially go up now for the oil at 45.34, okay? So yes, there is a potential turnaround there. What you then do is you take that and you do the AB equals CD here, right? And that's at 45.34. Okay, so I will still take that all the way downwards here. Okay, now because that's 78.6 it was, I think, earlier on, so you want to target the 1.272 area, which is on the dot of where you have drawn the ABCD area as well. Okay, so very likely that could be an area, okay, ABCD there showing you an upward trend. Okay, so if I take this, if I make that as my X to A of the M-like pattern, I would like to also look at 78.6 as a potential turnaround area here, right? Okay, now I will then pull X to, that's A, that's B, that's C, also to the B, and look at my 78.6 area and mark it as well. Okay, once I've done that, I have got a an area that is made out of horizontal lines, as you can see, and that becomes your zone. That is a reversal zone of where prices could visit before it makes a bounce up or a rebound. Okay, so what we want to do now, since we've got this zone area for oil on the daily chart, is to wait till prices go above that 45.34 area, perhaps 45.35, 45.40, but 45.40 a bit risky, close to the 50 area, but you can always look into 45.60 if you want, okay, and make that all the way upwards and take your profit before 47.80 at 47.75 or 47.70. Okay, so you've got some area of trade here to the upside, all right, but this is what you do. You would need to first look at prices, make sure it goes above that area, and this is your trading zone here. Okay, your trading zone is here, right? This is your trading zone to the upside. Okay, there you go. That's your trading area. This is based on this ABCD type pattern. Okay, turnaround of price going upwards based on this M-like pattern here. All right. Okay. Just want to look at something very quickly to make sure that M pattern is correct and things like that. Wait. I just like to use the volume indicator, which is here, volume, click volumes. I want to look for divergence to make sure this M pattern that I've drawn, that M pattern here, do I find divergence, meaning do I find opposite, okay? What I mean by that is that I've got an M pattern here, that is my X to A, and then this one is going downwards with the ABCD pattern, correct? So that M pattern started here. But here the volume is going downwards. Here the price is going upwards. Okay. Here this ABCD is going down, but then I see that the volume spike up a little bit, or there's a price increase here as well. Okay. So that opposite direction gives me a probability that this could be a good M-like pattern. Okay, if this is going up and then the volume as well is going up, that means that pattern may not be a very good pattern or high probable pattern to trade. If I see opposite between price or the candles and the volume, this is a good sign. It's called divergence between the prices and the volume indicator. Alright, so here we could see something, but we just need to wait a little bit until price goes above 45.34, and then you could buy and then you exit before 47.80. That's a short-term sort of trade because it's a small sort of trade, but that's based on the daily chart there. Okay, alright, let's see. Graceful drawing. Normal. Okay, so that's basically it. I've got an oil there, Euro GBP as I've mentioned. Let's look at Euro GBP very quickly, and there you go. And I'll just zoom out a little bit, give you an idea, and that's basically your Euro GBP. So a bit of a rise on that. For the Euro CAD, Euro CAD, again, it's on the upside, is giving us a bit of an idea. Take profit area at 1.5000. Okay, that is an area that you can actually take a look at. What else? We have got NZD USD also to the upside, a bit of target profit at the 0.7360 area. Okay, and let's see, AUD USD also on the upside on the 7600 area. There's a bit of a political thing going on that is impacting political and economics of Australia, so New Zealand is benefiting from that. So if you combine Australian dollar and New Zealand dollar, then you've got the New Zealand dollar trading on the higher side. Okay, but I'm not sure whether it's changed as of now, but this is what has gone. NZD in closing. Okay. Euro JPY. Okay, Veronica. Let's see. NZD in closing. I'm not sure what you mean. NZD in closing. Let's. Meanwhile, I will go and look into Euro JPY first. Okay, so file, new chart. Do I have Euro JPY here? Not really. Okay, so we'll go on to the Euro JPY. Right. Okay. Right. So yes, we've got a bit of a, as you know, there are more pressure for the yen to fall. Okay, at the moment, due to all this Abenomics that is going on, so it's time for them. There's more expectation for a downward move. Okay, for the yen to fall. Okay, so this is giving a lot more power of the euro over the yen. Okay, so this is basically what's going on. Here itself, we've got a bit of like a clear W-like pattern as well. But let's imagine this as an A, B, C, D upwards. Okay, so if I measure that just A to B, I just look at my C and it's at the 88.6. So 88.6 usually gives us a TP area at 113. Okay, so this is what's going on and has already happened. Okay, at 112. But let's look into daily chart. Let's zoom out a little bit. Okay, you could see that cup-like pattern downwards, upside down cup. You have got a lot of, you've got some bullish momentum there. As you can see, a little bit of an upside move. Prices have actually just literally pushed up all the way up to this point. From that point there, which is where prices are at this very moment. Okay, so this gives us a lot more room to think of an upward trend as opposed to a downward trend, because as you can see, you've got that support area there, very powerful support area. So let's mark that as a support zone. Okay, so I will use two lines there. Okay, based on that one candle there, and then the wick of that bullish candle is really close or exactly on the price now. Okay, so as you can see, beyond that price upwards, beyond that zone upwards, you had a big move to the upside. So if we, after we've looked to the left and then we go back to where prices are now, this gives us, as you can see, if this bullish candle goes through that zone now at 113.89 and then it goes above it, then you've got a big likelihood of more and more price action to the upside, because this is a really significant area to the upside. But again, we need to wait and look at it. You're looking at a daily chart at the moment for Euro JPY. This is what's going on. You've got the candle, you've got some bulls, okay, bullish candle that are trying to pierce through this support zone. But what if this support zone doesn't materialize, doesn't happen, didn't actually have the bulls to launch from this area upwards? Then it becomes a resistance. Then you will see a longer bearish momentum downwards. So at this stage, prices are at 113.53. Okay, so for it to go lower and lower, I would need to look at prices to go under 50 and then go lower and beat this area of bulls here. Okay, and go lower, then you have got the biasness to the downside. But if it goes above this 113.89 area and then it goes and then it pierces through this area here above 11487 and then go above higher, then we have got a big way upwards for the Euro JPY. At this moment, it's trading in between. Let's just wait. 113.60 gives us a little bit of an idea that it'll try to push forward upwards more, okay, because this is the area that I've drawn earlier on, was a very significant, very strong support area. So that is the biasness for Euro JPY, to look into the upward move as opposed to a downward move. Okay guys, all right, so that's basically it for the Euro JPY. If you guys got any question at the moment, looking at that. Okay. You guys are clear with your trade ideas. A couple of trade ideas I've shared with you guys. Gold still expected to go to the 1392.22 area, okay? And then if it does go through that, it might even reach 1433. But at the moment, oil is making a bit of a correction on the downside, okay? It's a little bit to the downside before it reaches an area. So 1350 was the psych level, and now it has stopped at that level and it's making a bit of a upward move. So let's look at 1360 and above, whether or not it goes that. If yes, then it might, it's got a time frame of a month and a half or so for it to make some move to the 3922 area and then 433 area within now. Okay. NZD versus what, Deboho? You have to be specific. NZD USD you mean, or NZD Australian dollar? NZD USD, is that correct? NZD USD. Okay. NZD CAD. All right. NZD US dollar. Let's just do that very quickly. As you can see, loads of downward momentum for NZD versus the dollar. So dollar strength is increasing based on what I can see here. But just on price action, you could see that it's actually caught up at the 27 area. So you would need to look into more downward pressure under the 20. You would need to look at whether or not you've got price momentum building up. You can see the daily chart, the weekly chart, and the monthly chart, especially the daily chart. You've got more downward momentum. You've got the candle building up. But again, price will tell you a clearer picture by going under the 7220 area. It is at a 7225 now. Okay, if you make that here, you could see that you've got an upward reach. Okay, you've got an angle as well. All right, 2 o'clock, a bit of a steep 2 o'clock angle here. All right, but again, we would need to pull the Fibonacci all the way. Let's say if I pull all this Fibonacci all the way up here, it lends. Okay, it lends at 224. Now the reason why I've pulled that through is because there may be a potential on a daily chart for a Z-like pattern up here. Okay, so if I pull that there and then I go all the way down here, okay, and I put that move, that becomes my A to B move, right? And I just pull that all the way up here. Okay, now you can see that that's exactly where prices are at the moment now as we speak. Okay, NZD USD. If I pull that A, that long move, and I try to look for the 50 area, this is an area where prices could potentially reach to before it comes downwards, but you have got two options. That is one, this is another here. Okay, so what usually happens is once prices does move upwards based on this pattern, that's your C to D move, it'll try to play around this area and most likely it'll aim downwards. Okay, and that downward move usually is about 50% of C to D. Okay, so you need to first find out where D has actually landed and coming downwards first. Then you can pull your Fibonacci from C to the D area here. Okay, then you look for 50%. That is your TP for your sell area. Okay, so right, so this is your B. Okay, this is called the bearish lazy Z pattern. There you got your A here. So A, B, C, D. We are waiting for that to go up there. Comes under. Oops. let me just clear off this, sorry, comes under 7202 and lower, you've got a chance for it to come close to that 50% of that length there. Okay. Gold numbers, sure. Gold numbers, Veronica. If it is on the upside, for now it is actually making that downward move, right? But if it reaches, let's say 1.3, okay, 1.360 and above, if you've got more bullish momentum to go upwards, then you could see it reaching the 1392 area. Okay, that means 1392 area. If it goes beyond 1392 and up and it got more momentum based on fundamental and everything else, then you can see it going to the 1433 area. That is between now to in about a month and a half to 2 months time. Okay, so it'll play around a lot with coming down, going up, coming down, going up, but we're looking at some momentum due to what's going on fundamentally, due to things going on in the States. You're looking at loads of what do you call that, safe haven sort of move by investors uncertainty. So you've got precious metals price going what do you call that, up. The thing is, there's something called the ETF, gold ETF. Okay, so the gold ETF holding, people owning the gold ETF has actually risen. Okay, that means it was at 1,450 tons before. Now it has gone up to 1,997. That just shows that more investors are holding gold, so their interest in gold ETFs has gone up. So because of political risk with the ETF holding going up, that is actually a sort of hint for gold to still have that momentum to go up. And we also look at inflow of the bond market. Okay, there are flows of funds into the bond market that which actually makes the bond yield to be below zero. If it is below zero and making that to be below zero, then the gold price again goes up. So that's the second reason of it, based on bond market. First reason based on ETF holding has gone up, and another reason of course is your political risk reason for gold to go up. So got a fundamental thing, but we wait for price a little bit more. 1360 and above may reach 1392 right up to the 1433 area, but we're talking about from now to medium term, sort of maybe a little bit more than medium term as well. Okay, so 1 to 3 months or so is your sort of ideal area, but trade in stages. Okay, so you've got a low here, and then you've got a high here. You can make that an A, and then B, and then C, and then try to make that D, an ABCD to trade the D point. Okay. All right, guys. Let's see. Okay, Veronica, no problem. Okay, Tariq, I would need to make the Euro USD as my last one. Okay, so Euro USD, let's just go back to Euro USD. Okay. Yes, you have got a bit of a W-like pattern. It's actually on the downside. Euro USD is showing loads of downward momentum, but let me clear this ones first. Okay, now the thing for Euro USD is what I can see here. It to the biasness or the idea, trade idea for Euro USD is to the downside. That means it's down, it's bearish. Okay, but we want to confirm that with price action. We want prices to go under. There you go. It's happening right now. 1.1040, you can actually short it at 1.1040, looking at more downward momentum. You can take about 100 pips or so, take profit area, because this is going a long way for the Euro USD to be on the downside. The reason is I could see the potential of a pole and flag pattern, which means if it does come downwards from this area where it has broken out, let's say from the high price area, it could be as low as huge a number as this pole area. That means how many pips this area is from this moment, this high price in this channel, this is how much it could actually go down towards to. But majority of the banks and everybody, they're looking at the 0820 as an area. So that is a correct area, sorry, of a potential TP area to the downside. Okay, 08. 0, so this is where the mistake was, 1.1040, that was where the mistake was. 1.1040 is your ideal entry price for the sell. Then you are taking profit at 1.0830 would be better than 20 because 20 is your side number. Okay, so that is your gap of making money there on the downside for the Euro USD, under 1040 right down to above 0820 or 0830 or even 0860. You still have got a significant amount or number of pips. Okay, but we're looking at a 1 hour chart, so yes, that's basically what could go on. All right, Tariq, brilliant. Okay guys, that's all I've got for you guys at the moment. Okay, so I would like to first say a big thank you for attending today's Live Mondays webinar. If you guys have got any question, please feel free to email me at kenny@allbacks.com. If you've got questions about your chart as well. I mean, for the live account holders, it'd be best for you to attend the Wednesday ones as well, because Wednesday ones is more a troubleshooting one, meaning that I would welcome your emails with your screenshots and everything else so that I can advise you on your current trades, okay, and give you some trade ideas as well. So let's see you guys again for those live account holders on Wednesday, and it's the same time, 4 hours, okay, 4 p.m. 4 p.m. GMT, 4 p.m. Cyprus time, so it's GMT plus 3, sorry. Okay, all right guys, thank you everyone, thank you Tebo, thank you guys, thank you everyone, and have a good evening, and I shall see you again on Wednesday. All right, if not, it will be next Monday. All right guys, thank you, have a good night, bye bye.